Hey, everybody, and welcome back to this week's Mindset for Success. My name is Cliff Sereday. I'm the team leader for Marti Hampton Real Estate, and I'm here with Hunter Boyd of the Sherriano team with First Heritage Mortgage.
Yeah.
Welcome, welcome, welcome. Today, we are going to be going over some mortgage myths and home buying myths, especially with this crazy market. And I think we're going to get into the loan level pricing adjustment some today. So I'm excited to learn more about that and how does that affect home buyers now.
Yeah, so LLPA is loan level pricing adjustments. There's a lot of clickbait out there right now for it. There's a lot of catchy titles that say lower scores, lower credit scores, lower down payments, you're now going to get a better deal than the higher credit scores. And what they're doing is taking a little bit of information, twisting it to get you to click in that article. What is happening is Fannie Mae and Freddie Mac, they are the gods that be. They are trying to make it a little bit more affordable for people who can't put as much down. So whether you've got whether you've got an 800 credit score or a 640 credit score, you're going to get a little bit better deal out of this as after May 1st, which is when most of these LLPAs. If you are 800 credit score and you're putting 25% down, you're going to be charged a little bit more. They're trying to reduce the margins there. They're also trying to help first-time home buyers get into homes. A lot of people out there and buying investment properties right now. That's great. That's awesome. They're building their wealth. They're building their property portfolio. But what Fannie Mae and Freddie Mac want to do is they want to have people buy their own homes, build their own wealth. Start to enjoy that appreciation that everybody else is kind of seeing right now. So if you do have a high credit score, if you do have a low credit score, and you're putting minimum down, you're probably going to see a little bit better in pricing, which means less origination points. Your rate may be a tiny bit better as well. If you have high credit score and you're putting a lot of money down, you may be seeing just a little bit more cost up front. We'll tell you, a lot of investors have probably already started to incorporate this into their pricing. So, over the last 30 days, this has maybe already been filtered in a little bit. So it may not be as much of a shock after May 1st. I don't think anyone's going to be going from, a 6% rate with 1 point to a 6% rate with 5 points. It's nothing like dramatic like that. But, just as we ease into this next phase with pricing. And then after August 1st, they're adding another, if you're back in debt to income ratio, it's 40%, which is lender jargon. Basically, if all of your debts, including your house, equal 40% or more of your gross monthly income, there's going to be another pricing adjustment, so it's going to be a little bit more costly. I will tell you, most clients are over that 40%, so everyone's going to be experiencing that.
Okay.
This isn't also specific to any purchase price. This is, $100,000 mortgage all the way up.
Right.
This is going to be affecting everybody equally. And
for realtors who are not mortgage lenders, what's like layman's terms on, if I'm a buyer coming in and I have a great credit score and, am I going to be paying more now because I, have a higher income or, have a better credit score? What's the best way to explain that to if you're working with buyers?
I wouldn't even attempt it. I would defer to your lender. Okay. Make your lender do the work. If you have a buyer who's putting 20% down, that you're as an agent, your job to best represent your client, to get your client the best deal in all areas of the transaction is to tell your client, ask your lender for 10% down, ask your lender for 5% down, because there is going to be a pricing difference between that 5% down and a 20% down. And if that client then makes the decision, hey, I want to put 5% down, you can always, if your lender allows, which we do at First Heritage Mortgage, you can do what's called a recast. 60 days after that client closes, they put 5% down. They've got PMI on there. They've got a higher monthly mortgage payment than probably they wanted to pay. Contact the servicer. Ask the servicer, hey, look, I want to pay for a recast, which is a re-amortization after a lump sum of payments towards that loan balance. So basically, let's use an example. You've got a $250,000 loan amount. You have a monthly payment, principal and interest based off a $250,000 loan amount. You only put 5% down, so you also have PMI. Let's say you wanted to put another $50,000 down, but you did not want to pay the higher pricing that comes with that extra down payment at your closing. You can then go to your servicer and say, hey, look, I want to put this additional money down towards my loan. It can drop your PMI. It can re-amortize your payments so that instead of paying that higher monthly payment, the 29 years and 10 months is now going to be structured off of that lower balance. And you end up paying maybe a $300-400 servicing fee, but it could be saving me thousands at the closing table. I mean,
Right.
I'll take a few $100 over $1,000 at the closing table and already expensive time when you're
Right.
putting down payment down every single day.
Yeah. That's awesome. We'll move on a little bit. So if you have any questions on the LLPA,
Yeah, another fun.
but-
Send them because I'm
Send-
sure you probably have a few.
yeah, so send them into the chat and then we'll do those in the Q&A at the end. So speaking to right now with, you know, kind of the market we're in,
Yeah.
and, you know, rates are fluctuating. I feel like they've been kind of like stagnant for a little bit the
Yeah.
past few weeks. Objections on that because, you know, we're still coming out of that COVID market and the, you know,
I mean,
the beautiful
last
2.3.
10 years.
Yeah.
Yeah. I mean, the last 10 years, you've seen, you know, rates at 4%, maybe 4.5%,
Right.
God forbid.
Yeah.
But a lot of people saw a 2.5% rate for the first time in their life. And unfortunately, it was probably the last time in their life
Yeah.
as well. You're going to see that. So I do get this question a lot from agents where, how do I help my clients, you know, understand that this is the new normal?
Right.
And I really do think it depends on how old the client is you're dealing with. Because if you have someone who bought their first home in 1992,
Yep.
they were paying a 14% mortgage.
Yep.
You know, that client, when I'm talking to that guy about a 6% interest rate, he's like, oh yeah, man, just lock it in. Let's go for it. Because, you know, I remember my first house was twice this much in interest. You know, it's no big deal. Just keep it moving. But you've then talked to another client who's bought their first home this year, last few years, or even, you know, 2009, 2010, where rates are around 4 or 5%.
Right.
And they're like, oh my God, this is horrible. Well, comparatively to historic lows that you've experienced for the last decade, yes, this is not a great rate. But those were historic lows. That was
Right.
a
Never going to happen again.
Yeah, it's a snapshot in time that, you know, you've experienced mortgage historical lows.
Right.
Where if you look at the last 20 years, the average is 7%. Even considering those historic lows, the 20-year average is 7%. Now, clients closed last year at 7.5%. You know, they should be looking at refinancing in the next 6 months.
That was my next thing is if I purchase now at whatever the rate is,
Yeah.
and then, you know, 6 months, 8 months on the road, they fall, they, you know, cut in half.
Yeah.
Can I refinance?
Absolutely. Absolutely. You know, that should be a conversation that you are having with your lender. Is there an early payoff fee? Most of the time there's not anymore. Kind of did away with those.
Right.
But make sure there's no early payoff on your loan. And especially if the lender can build in paying for your closing costs, because that's kind of the biggest thing, you know, the biggest expense when you're refinancing. Yeah, you're going to get that lower monthly payment, but you know, you've still got to come up with $3,000 or $4,000 to do this. You know, is the return on it going to be worth it? Are you going to be in that house long enough to recoup that? Where if the lender can pay those, you don't have to ask those extra questions.
Right.
You know, it's always a good time to refinance if you can save money and you can get away without paying your closing costs.
Okay, good. Yeah, I mean, I think too, my biggest explainer to like agents that are talking about it is because like when I moved to Raleigh 2 years ago, and it was right when it was like 2%, 2.3%, but they were paying $150,000 over the ask price.
Absolutely.
So their mortgage payments are still more expensive. If they repurchase the same house now at say, you know, 6%, your payments are still lower because you're getting it at ask price. You're not paying $100K over ask,
100.
and you're not, you know, that invested in it, right?
That's exactly right. When you look at like a 3-year time frame of how much money you put into that house with having to pay over list price by $50,000, $60,000. Yes, you absolutely have that lower interest, but you have to add on the amount that you had put into that house just to get in the door. Where now you can go in at list price. Not everywhere, but you can get seller concessions in some markets. I mean, these are things that have to be considered where, you know, you don't have to go over anymore. The interest rate's a little bit higher, maybe a couple $100 more a month. Absolutely understand that is a real fact you have to deal with as a buyer in this market right now. But you're still getting a better deal because you're growing your appreciation. The second you close on that home, that property's value is going up. You're enjoying the benefits of that, and every month you're paying that balance down as well. So it's working both directions for you.
Well, let's talk about the market. What benefit we're seeing right now, buyers coming in. I think there's like there's gonna be like a 20, 25, 30% fall through rate with buyers this year nationally. Does who you work with matter right now in this market as your lender? What are you talking about with when you're working with I guess, leads on your end too,
Yeah,
coming into you. How are you explaining that, or what does that look like on your end?
man, in real estate, time is money.
Yeah.
I mean, it has always been that way and it always will be that way. But right now, when the market is hard, you absolutely need someone who's gonna be available to you. You need someone who's gonna pick up the phone. You don't need to be communicating through email. It takes an hour, 2 hours to get a response. Can I get a pre-qual letter? Well, yeah, you can 8 hours later and the house is already off the market. You need somebody that's gonna be available to you. You need to develop those relationships that are going to be able to answer the phone 8 to 8, evenings, weekends, you've got to have someone that you can trust to be there. Because it is you're in the trenches right now. You also need someone who's going to be committed to getting that loan closed on time. I mean, the last thing you want is someone who says someone's pre-qualified and they didn't do any due diligence up front, and you finally won a deal and you don't even get to close because the lender didn't do their job.
Right.
That.
Well, I just overheard yesterday, one of our listing agents they were calling, they had 5 offers that came in and she called every single lender.
Really?
Yep.
So if that offer had been with us, we would have actually called her if they were fully
go.
pre-approved.
There you
A
go.
little plug there.
Yeah. But you're not going to get that. I mean, I think it's huge, especially with realtors that are watching too. I mean, I think right now, especially because I'm not going to name any names, but the big box like lending companies, they bank on the failure rate. So they're going to approve everybody and their mama get approved. But I mean, they don't care if you close or not because they have, they're going to close 1,000 loans that month.
That's it.
So they're kind of banking on the fact that let's, get everybody in the door and we'll see if we can get them into their house.
And a lot of those companies are built off of, paper pushers, data entry and automatic clearing your eyes on that application.
Right.
You've got to be able to have someone ask a question.
Yeah.
Is something going on in this application that can blow this thing up later on? And that's got to be, one, figured out by your lender, but 2, communicated with the agent like, hey, look, I'm sorry, this is going to take a little bit of time, but I've got to talk to our buyer and make sure that we are all covered by the time they go into contract.
Right. Well, let's move on, get to the next section. I'm a renter.
Okay.
Hypothetical.
All
Well,
right.
I am a renter. So is that renting's cheaper for me?
Is it?
No,
Is it? Okay. How long have you been renting?
my whole life.
Your whole life.
Mhm.
And in the past 5 years, how many years has your rent gone up every year?
Every single year.
Every single year.
Every single
That is
year.
wild, because if you were in a fixed rate mortgage, your insurance may change a little bit, your taxes may go up, but that fixed rate's not changing every single year. That is something to consider. Also, in those 5 years, how much appraised or equity growth have you experienced in that apartment?
0.
Not a single one. God. 2 years ago, we had a 19% appreciation in this market.
Yeah.
That would have been sweet to get a hold of. I mean, things like that, you've got to consider the facts of, you're gonna hear people say renting's cheaper, but is it gonna be cheaper in 3 years?
Right.
Is it gonna be cheaper when, Raleigh right now, just Raleigh needs 10,000 apartment units to keep up with the current level of population, just continuing to grow in this area. 10,000. That's going to cause apartments to go up. There's only so much space in Raleigh.
Right.
That's going to cause every year an increase 5-10%, whatever they can do. I mean, those things have to be considered because that client could be growing their equity. They could be putting minimum down, work with a lender that can get down payment assistance. Literally purchase a house and get into a house for less than $6,000.
Now,
$5,000.
if your credit's not perfect, right? So we hear the conversation that 620 is always needed.
Yes.
Right.
Yes.
It can come down to company specific, but are there programs for people that may not have perfect credit, or they may not have that? I don't think 620 is perfect credit, but that other programs for that, because I think that too, especially with renters, they're like, I can't get into a loan because I'm renting, I don't have credit built up, or whatever the case is. That I think that's where a lot of objections come from renters and from first-time home buyers, that they just are not aware of the programs that are offered. Can you talk a little bit, maybe it's about some first-time home buyer programs that I guess like that across the state or
Yep.
company specific?
So NC Housing is one company we work with. They provide for first-time home buyers up to $15,000 in down payment assistance credit. That can cover your down payment on a lot of homes and some of the closing costs right there.
Yeah.
They do want you to have at least a 640 credit score. So
Okay.
not everybody's there. Let's just
Right.
face it. If you were to apply with us, we would, if you're not there, we like to say we talk to our denials as much as our approvals because we've got as much information to share with them as someone who's approved and about to go house hunting. Maybe even more so because we need to get them there. They've already expressed an interest in buying. We're going to give them what's called a wayfinder. We're going to give them what if simulator. We're going to give them a copy of their credit report. We're going to go over those 3 documents with them. Hey, the wayfinder tells you step by step what you need to do to get your credit, that 640 point.
Right.
The what if simulator is going to give you a timeline. If you do these things, this is how much time you have to be here. So at that point, that person knows I need to enter into the lease,
Right.
or I need to get on it right now. I need to bust my butt because I've got 6 months to get this thing right, and I'm even down my apartment at 8.
That's huge. Okay, I didn't even really realize it was that involved either, because I think I just talked to the mindset and then also my agents about being that, like, what's next.
Yeah.
So like guiding, like meeting someone where they're at, whether maybe they're not ready just yet, but then taking them where they need to be. So you're giving them that clear path to homeownership too, which is like, I feel like creates less, gets everyone's nerves down. And I had a plan, right? So if they laid all the rules out, what I got to do, I just have to do it, follow the rules, and then I'll get to where I need to be. So
and we're relationship driven in our business.
Yeah.
Even if you're not able to help someone get in the house right now because they've got some things to work on, you have now 6 months of opportunity to develop that relationship. Yeah. Hey, how's it going with these things? I know that, we need to knock out this, and this, what you told me. How are we doing? How many of those things have we knocked out? That person is now feeling like you're a part of this with them. Yeah. They're not walking this road by themselves. They're not like, oh my God, I don't know what to do. They've got someone that's going to hold their hand, and it's not a deal right now, but I need to eat in 6 months. Yep. I don't know about you.
Yeah. I gotta eat.
It's a deal 6 months from now. Yeah. And really all it takes is every occasional text message or a phone call. I mean, that's something we should be picking up the phone for every client. Anyways.
Right. Well, I mean, it's huge. Yeah. You're just building your pipeline out. That's the same thing, any lead that comes in, right? So you're just creating that plan, whether that everyone's plan is going to look a little different. Yeah. But being that agent or, lender, you guys, working together, also that partnership too. And we've been partnered with Sereday team for years, and created, it's like, we're both trying to get that lead or that client to convert over. And it's kind of doubling down on them. And it's, it's great when you have that partnership with a lender who gives, like, they care about the agent and then also that client as well. And we're able to have success with that. So.
Yeah. I mean, our Instagram handle, another plug, is Your Mortgage Matchmakers. We want to be that client's mortgage matchmaker. We want to put them in the best product for them. We want to make it, this almost seem like a relationship between them and their home and their mortgage, where they find the perfect one. And maybe, it was popular 6 months ago, you date the rate, marry the house. And maybe you're in a situation where you're not looking for a long-term relationship with that mortgage. But, we're there to then come back and say, hey, look, John, we know we locked you in. We know you closed at 7%. Right now, we can offer you 6% and pay your closing costs, save you a few $100s a month. Right. That's something that's built into our business already, where we develop our pipeline. And also, if they say, actually, Hunter, I'm thinking about selling and looking to get something else, that's another opportunity for me to come in. Hey, Cliff, remember John? Yep. John bought with us last year. He's actually not really happy with the house. He told me he was going to be buying and selling. Right. Might be a good opportunity for you to reach out.
Well, and that's huge right now. I mean, we talk about that, especially like when in 2021, someone purchased a house, those poor buyers, they were pushed in those houses. They had no choice. So, I mean, that's like, for realtors right now, call your past clients, make sure they still love that house, because the one they definitely paid a pretty penny for it. But I mean, there's a lot of decent chance that they're still looking. So I'm going to go ahead and open it up for any questions you guys may have for either me or Hunter.
Yeah, let's get some questions. Type them in the chat. Hunter, just to go over the LLPAs again, when are the new loan level pricing adjustments effective?
So the credit scores, the down payments, those are going into effect May 1st. So just in just a few days. The 40% debt to income ratio LLPA is scheduled to go into effect on August 1st of this year. So we've got most of them coming up very soon. And then one additional one come on as we enter the fall season.
And then just at the end, mortgages are adjustable rate mortgages a good option for first-time home buyers?
So ARMs have been a great product in the past. I will tell you that most investors, like a lot of people in finance right now, are expecting a recession in the next 6 to 12 months. Some would say we're already there, depends on which news.
I thought we've been there for
Yeah,
the past 12 months.
It really just depends on what news channel you turn
Right,
into.
yeah.
So because of that, because investors are expecting that, and ARMs are the first loans to usually get refinanced, they're often coming with heavier origination points right now. So heavier fees up front. So while the rate looks really pretty, kind of like a couple years ago where you're paying over list price, you also have to consider what you're paying to get that rate. If you go to a big box lender, we won't name any right now, but if you go to them, a lot of them will quote you at a really pretty rate for an ARM, but they're charging you 3 points to get that. Well, on a $500,000 mortgage, that's 15 grand that you're going to be paying, where you get a fixed rate, considerably less points. And yeah, your payment may be $100 more, but how many months does it take for $100 to get to 15 grand? It's 150 payments. Like, that's a long time. Most people aren't even in their home for 150 payments. So it's just something to consider.
Couple questions. What is the income limit for the down payment assistance? And I think this one kind of ties in with it. What income requirements are you looking for, let's say, for $400,000?
Okay. So for the down payment assistance, in most counties in North Carolina, it's $110,000. There are outliers and things like that, but in most counties, it's generally anywhere from 86 to 110. In Wake County, I know it's 110. And it really just depends on the average income in that county. So, smaller counties, more rural counties, maybe a little bit lower. For a $400,000 house, it really depends on how much other debt you have. If you're looking at a $2,000 monthly payment, let's just say, I'm not saying it's a payment for $400K, but let's just say 200 for conversation's sake, you're at a $2,000 monthly payment. You're going to want that $2,000 monthly payment to be including all your debts. So, your car loans, your credit cards, any personal loans, all that you have to be less than half of your gross monthly income. So let's say you've got $3,000 total in monthly debt. You're going to want at least $6,000 in monthly gross monthly income before taxes, not after, but before, to qualify for, a conventional mortgage. The higher up that income, obviously, the better.
All right, let's call for questions. Is it true that I need a perfect credit score to qualify for a mortgage?
Absolutely not. Thank you.
Bring them on.
That question. So anywhere from a 640, 620 up to 800, all those have mortgage products that are available to them. If you're going through as a first-time home buyer, certain programs like NCHFA, NC Housing, the down payment assistance I spoke on earlier, they have a flat rate. So, credit unions are changing, some big credit unions in the area, especially, are changing the way they do it. They're going to risk-based lending. So they're going to be different interest rates based on your credit scores and stuff. NC Housing is not. It's one of the few ones that remain where it's a flat rate. Whether you've got a 640 and you qualify or 800 and you qualify, you get the same rate right now. So it's a really good product.
And I think their income is higher than 110. I think it's 126
for the 3%.
for them. Yeah. Look at that. I know.
So it's really good.
Okay, so if you want to get a hold of Hunter, how can they reach you?
Absolutely. Our team line is 919-234-7415. You can also email us at team@thesherrybrianoteam.com. Visit our website at www.thesherrybrianoteam.com or DM us at Your Mortgage Matchmakers.
There you go. And if you're interested in hearing more about our team at Marti Hampton Real Estate, I invite you to go to joinmartihampton.com/team for more information and to schedule a meeting with me.